Okay, firstly, you guys know how we do this by now. Let's look at Bitcoin, we'll look at Dixie, USDT dominance, all of that. And then after that, if you guys have any alts you want me to look over, just put it in chat. But I do have a few. I've already touched it in the YouTube video I shared in my channel. I went over a lot of different setups. But, there's a few I'd like to touch on. So let's begin with Bitcoin. And obviously we know today we're getting the rate cuts, right? We're getting the rate cuts. So we'll see how all of that goes. Can you guys still hear my voice? Okay, there we go. Yeah, yeah, we can. Yeah, okay. Because I don't know when my internet's gonna just decide to roll over and die. So just making sure. If I cut off for whatever reason, just put it in chat and I'll change my router. But let's get started with Bitcoin. One second. Let me turn these off once. This and we turn the key levels on properly. We turn these off. These are the key areas we've been working with so far, right? And these are the same areas that have not changed since we originally started looking at this as soon as this low was put in around May, right? So these are the key areas, and the line in the sand was, if you guys remember what I was saying about the 4 month close, right? The triennial close. I said if you got a 4 month close above, at the minimum 57,789, that'd be amazing, right? Which you did. You got the 4 month close above 57,789, but the weekly, the week that preceded the 4 month close, right? The weekly literally closed after the 4 month close. What did the weekly do? The weekly then went, and if you actually take a look at this area now, and invalidated that 4 month close completely. And so the 4 month closed above, and literally the next day, which was the weekly close, sellers took control again, throw price below the 6 month mid, which gave you this little pullback right here again, right? Which is all fine because the line in the sand is as long as you're above this zone, you are working with this range. Okay. That's the range you're working with as long as you're above 58,787 to 57,596, right? That general area here. As long as you're above that, this is the range that you're working with. And this week, so far, Bitcoin's chart looks infinitely better than what it did last week anyway. And by that, I'm not saying, oh, we look so damn bullish. Like, obviously, it's very evident that the structure is lower highs and lower lows, right? Very evident that the structure is lower highs and lower lows. But as long as you are above and buyers are demonstrating their willingness to bid this area and regard it as supports, you are just look to the left, right? You're saying, okay, this is going to be a first target, and then this is going to be a second target. Right? That's what you're saying ultimately. All we need to do is hold this area and not lose it. Right. So if after the rate cuts today, we once again go right and we close below, that's obviously not what you're looking for. If anything, you've printed another lower high. Right. That's not what you're going to want to see. But as long as we hold this, we can at least try to now go, right, take out the last lower high, put a higher low in, work towards undoing some of the damage that this structure has done, right? The lower highs and lower lows. Now, to be ultimately bullish, right? To be ultimately bullish, you need to go and clear all of this out, right? All these lower highs, you need to go put some sort of high in that sweeps all the liquidity from here, right? And then if you get a high low following that, that is literally the best scenario you could ask for in terms of price action. That's the best scenario you could ask for in terms of price action. But obviously, to do that now, there's a lot of work that the buyers need to put in, right? So it's not going to be an easy shift. It's going to take some time. There's a lot of resistance overhead that there's a lot of overhead supply, right? There's a lot of supply overhang. We can see that very clearly. So we need to go take all of that out before we can properly shift structure bullish again, right? Of course, on the macro, we know we're still making higher highs and higher lows, but that doesn't invalidate the fact that now, locally speaking, we are still downtrending, right? But like I said, as long as keep regarding key levels as support, you don't lose them. You always have arguments for why you can now go back up and at least clear these out, right? And again, if we now take a look at the potential harmonics that are formed in this area, I see two, right? Right over here. So the first harmonic that I see that has formed in this area is if I do this, let me turn key levels off. So this is the first harmonic that I see that's formed in this area. And let me just make sure you guys can still see my screen. Because my trading view is acting up, is saying I'm not connected. Can you guys still hear me? Yeah, okay. Yeah, I think it's just a trading view problem. This was happening like to me yesterday and the day before as well, where trading view just freezes and just doesn't give you a connection. You see that from the signal there. But okay, if you guys can see, then that's fine. Right. So we have a 786 firstly here. Right. So what is this? This is again a bearish Garley right over here. 618 on the retracement, right? You have the seven, basically a 786 on the C point, and you also have a 786 on this D point, right? So as long as you don't lose this C, this harmonic now will be in play, which should take you to your first target that I'm watching for now. If buyers hold this area, 68,498, right? Somewhere around there. Now, in my opinion, if you do get this harmonic and you roll over from here, that's not going to be bullish, right? Because at the end of the day, you're still going to be making lower lows, right? So in my opinion, you need to go and actually fill the second harmonic that I see, which is now this butterfly right here, right? So you have the 786 basically right over here, 786 on the retracement, 1.27 in the extension. All the ratios are adhered to, basically. All the ratios are within the allowed ranges. So if you got this butterfly, I think that would be an amazing show of strength from the buyers, right? If you've got this butterfly, this would also give you that scenario we were talking about, where you go higher, you sweep all the liquidity, right? Maybe you come down, um, put some sort of high low in before going high, right? And even if you get below this 786 on the retrace, as long as you put some sort of higher low in, that's the important thing, right? You want to put a higher low in at the end of the day. That's the beautiful, that's the line in the sand. You want to clear all this liquidity out and then put a higher low in, right? Just want to invalidate this basically, right? So the argument for upside, the more lower highs and lower lows you get, obviously, it's just that's just a sign, continuous sign of supply overhang, supply overhang, supply overhang. Oh yeah, I see that, brother. Oh my God. Right, sorry about that, guys.
Let me
Jesus.
guess. Thunderstorm? Hail?
Right,
Lot of
I
rain?
just had to change my router. I was
Okay.
connected to my business one. I think that's the problem. Maybe lots of people are using it right now. Right, let me start streaming again. Sorry. There you go. Right, can you guys see it again?
Yeah, we can see it, bro.
Yeah. Okay, thanks, bro. Okay. Anyway, y- if you're talking like going back to what we were saying, if you're talking in general sense, right, you want to be ultra bullish again. You want to have zero arguments as to why we should go down. These highs need to be taken out. Right, that's the line in the sand that I'm talking about currently. But what we do have coming up in 12 days, 12 or 13 days, I forget, is we do have again the quarterly close coming up, right? So we've had the triennial, which we're in our last triennial section now. So we do have the quarterly close coming up. And again, for the quarterly close, target is very simple. As long as you can close, there's 3 months of our 58,787. Okay, that's the line in the sand. 58,787 now. You are, in my opinion, you've had a breakout, right? And then if I turn everything apart from just this off, so it's easier for you guys to see. Just here is this. So I'm just gonna do this to this and hide there. This right here, that's your line in your sand, right? If we're talking in terms of quarterly levels, because the reason I'm saying that is I'm just going to mark this out here, right? And this is something I like to call a seller zone, right? This isn't a liquidity pocket. This isn't your, supply zone that we normally used to. I just refer to this as an area where if you consider this in a quarterly sense, right? And you look at it, this is an area where sellers have been in complete control in history, right? And the reason I'm saying that is because you can see buyers trying to close price within this zone, right? You have candles pushing up, you have candles pushing up. But this zone now represents the area where even though buyers took the price there, they tried to take control, sellers ultimately took the control back from the buyers, right? And this was the most dominant area because this is the area marked out where there has been no candle body closes on the 3 months. On the quarterly, there's been no candle body closes here previously, every time you've gone to this area, right? So between 68,997, which is your previous all-time highs, down to 58,793, right? Between this area, you've had no candle body closes, right? None at all. So what we've done now on the 3 months so far is this current phase of the market, we've had a breakout, right? Or rather a break in to the said area. Again, historically speaking, no quarterly candle body closes within this area. Sellers have always been in utmost control. But now we can see a complete close at and above the zone, plus one. And if this 3 months closes anything like this, two, right? Two successful retests of at least the low. Right, so what you're saying is, whereas this area was now marking, right, the area where buyers couldn't close any candle bodies in history, right? Buyers struggled to do so. Sellers, the supply overhang was so great that every time buyers did try, sellers would, kick them out. Now you see the opposite being true, right? You see buyers breaking into the zone, and then you see sellers attempting, right? Look at this red candle. Sellers attempted to close the price back below the area because they know if they manage to do so, we're going to get price action like this, right? But look what's happened every single time on the quarterly. Buyers have now defended this area. Right? They've not let sellers close below. Right? Wicks don't count. Wicks is just an attempt, right? What matters is the close, because the close tells you, okay, by the time the shift was put in, which side ended up with the edge, right? And if the 3 month closes like this, in my opinion, you have a reason to be bullish because you're saying we've for 2 quarterly periods straight, buyers have demonstrated strength in an area where historically speaking, they have had zero control, right? It's been completely seller focused. So that's why, the line in the sand, 58,787, right? Right there, 58,787. As long as you can close above that, you have had one and then you'll have had two successful quarterly closes in this area, which would again line up with, people say October, right? uh, bullish in my opinion, right? So I'd be looking towards a bullish last quarter going into the end of the year if this close was to happen, right? I could be wrong. I'm not saying this is definite, right? You could close above and then the next candle, once again, just like the weekly, it could nick you. We don't know, but the best we can do is at least keep the key areas in mind. And specifically, this is key areas with context to price action, right? Not just arbitrary looking at the chart saying, this looks like a good support, this looks like a good resistance. No, looking at price action, analyzing where have buyers and sellers been active, right? With price action context in mind, this looks like a very key area for us to follow, right? And that's just, that's the price action, that's the actual data from history telling us that. So in 12 days, 12 hours, right? As long as you can close above 58,787, I'd be looking for a bullish last quarter. That's my thesis so far. Of course, it will change as price action develops, especially after the quarterly close. But this is the level to watch for, right? In my opinion, 58,787. 58,787 to 58,793, that general area, right? Because depending on which candle you go to. takes the price different by like $5. Doesn't really matter. But as long as you're closing above this kind of body closes, right? That's my thesis as to why you'd be now looking for high. Right? Because sellers have tried 6 months. Sellers tried, right? But they've not succeeded. For half a year now, they've not succeeded to lose this area. So I'll keep checking back to the chat to see if there is any questions. Oh, Rosati, bro, that's if you shift click, you should be able to do that. If you hold control and click on the object tree, you can like manually select which ones you want to which ones you want to do. So if I go into the object tree, for example, here, and I was to do control click, you can see I can select different ones, right? They don't have to be next to each other. And if you have one, for example, and you shift click, it selects everything in between, the two. Very useful for yeah, no problem, brother. Okay, so anyway, that's Bitcoin. Let's look at Dixie real quick. And then we'll look over some other things. One sec. Let's go to yeah. Dixie. Where are you? You're over here. Ooh, ooh, damn. That is a nasty candle on Dixie. What are we looking at? 3 months. That is crazy. Yeah, one sec. Let's zoom in. Here we go. I can yeah, I can get rid of this for now. Don't see that yet. I mean, it's not all doom and gloom for Dixie, I suppose. You're still at the if you look where we are, we'll be looking at the same range, right? Literally since I started streaming in Unity, same range, back towards the range lows, right? Let's see what the rate cuts do to this, but it's a major support right now. That's the important thing. Major support. If this holds and you go higher, you're gonna see especially if it's a macro pump, right? You're gonna see a pullback on risk on assets. It's just how it goes, right? You've got the inverse correlation. It's not a one-to-one correlation, but it's an inverse correlation nonetheless. You see a pump on this, then obviously that's not what you want to see for risk on assets if you're bullish on them. But if you don't lose this range, that's when it gets really nasty, right? You're gonna dump towards 99.54. That's the only thing you do have here on the charts. Let me extend this right one sec. So you lose the gray box, you're going to your external range, and that's the range you marked out because obviously you've had one low here, right? You've had one low in the past. So if this breaks down, then you're going to get your relief on your alts, not on your alts, sorry, on your risk on assets, right? But if this bounces up, that's not what you want to see for risk on assets, obviously. Which is why again, we say don't look for massive swings when you have macro indicators as support, right? Like Dixie, like USDT dominance, which is, by the way, what is it doing? Uptrending, right? Again, the same area we were looking at and saying be very careful. And if you guys go back, it's probably on my YouTube channel, the recordings, we were saying, look, Bitcoin's not going to make new highs until you lose, right? Breakdown with a confirmation, right? Confirmation breakdown from this zone, because you can see in history what's happened every time. Dixie's, you've had crazy bounces up, right? It was a very confluential area, just based off that one confluence, of course. There was other confluences there too, but very, very pivotal area here. So if you're looking for a macro lower high on Dixie, of course, we could go up some more, put it around this supply line before going back down, right? Supply zone, let's say. You see resistance, resistance, resistance would make sense for a lower high again, right? If you are if you're overall bullish, you want to be looking for a lower high. Obviously, you don't want to see a breakout retest of this because that's going to be extremely bearish for crypto. But what you're doing currently is once again, if I go back to which time frame did I get this from? I believe it was from the. Let me see one sec. Yeah, 4 months. Let me just change the color for that. 4 months, I only put it yellow. This is now again representing the area where if you take a look at this candle, right? This candle is telling you price opened here. For whatever reason, we had a drop down, right? Sellers to control. But once this area was hit, 4.29, buyers took control back from the sellers before taking this up to 6.77. And finally, sellers took control back from the buyers before closing the candle of 5.83, right? Which is why I marked this down. This now represents your seller zone, right? This represents the area again where sellers were in control. And of course, by sellers, we don't mean there's someone sat there manually, buying, selling USDT, but more in the general sense, right? Because what does USDT dominance represents? This is showing you now the dominance of USDT, right? So if this is a seller zone, then what you're saying is, look, if you want USDT dominance to go higher, you need to be regarding this as support first, this second, and this third, right? If you can flip those into supports, you have an argument for why you're going to go higher. But if you go and start regarding this as resistance, all you're doing is reconfirming that what was once a seller zone on the 4 months is indeed still resistance, right? So for now, you've gone back to the zero point 0.5, you treat it as resistance, and you're fighting for your life at the one, right? If you lose this 5.83%, you're going back down towards 5.06% at a minimum, right? That's what's going to happen. This. So if you're bullish on crypto, what you want to see is a breakdown from 5.83%, right? If you take a look at this on the weekly now, you can see the rejection from the zero point 0.5, right? A failure out to the upside, and then a close below. And of course, in a traditional, if you were looking at a traditional crypto, you were trading this, that would be a swing entry for you, right? If you wanted to try and take a swing entry, that is your low risk swing entry. You do this, risk reward of 3 minimum, right? As soon as you get to a risk reward of 3, trim some profits, put your stop loss break even. After that, it's just about sizing up if the trend continues or getting stopped out in the green, right? But you can still see that one, right? The low of that area of the seller zone is still being regarded as support for now. You want that to not be the case if you want to be bullish on crypto, right? Even short term, if you want to be bullish, this needs to be lost, right? Break down, start rejecting this on the daily, right? Build that up to the weekly, and then have a dump back towards this. That's what you want to see if you want to be bullish on crypto. Because if this keeps being regarded as support, then this is going to trend higher again, right? Because what you're saying is, okay, well, in terms of just buyers versus sellers, buyers are holding what was once resistance, an area where sellers took control. The low of that, buyers are now holding as support, right? Meaning an area where sellers were active again, buyers are now showing their strength within that area. That's not what you want to see in this particular case, right? In any other crypto, that's what you want to see. But since this is USDT dominance, it's inversely correlated. You want to see weakness here, right? You want to see breakdown, retest. We want this to go down if you want your backs to go up, right? Yeah, it's recorded. Yeah, so for the Dixie, inverse correlation, I just look at this as a macro indicator, right? I'm not looking at this on the daily. I look at this like once or twice a week, maybe. This is showing you the relative strength of the United States dollar, right? The index. And all you need to know as traders, right? You don't need to, as traders, you don't need to actually trade the charts. You don't need to go very deep into this. All you need to know is this is inversely correlated to risk on assets. Okay, Dixie go up, that's typically not going to be a risk on environment, right? That's a risk off environment. And if Dixie go down, that's a risk on environment. So basically, if Dixie's at support, then you don't go and long your cryptos, right? Or you don't go and open huge longs on whatever risk on assets you're trading. It's the inverse. If Dixie supports, you'd be taking some profits, maybe opening some hedges. If Dixie's a major resistance, that's when you'd be looking for, okay, take profits of your shorts, open some hedge longs, or open your swings, whatever, right? Which is why, again, if you look at majority of the calls I gave for swings, right, which is the last majority bulk of calls I gave was September, October, that sort of time last year, right? If you look at where Dixie was 2023, right, September to October, you were having a liquidity rate, right, what was a very good liquidity rate of your true range, right here, range high, right, range low, range low, range low. You were having a liquidity rate, and why did I say it's a liquidity rate? Because you went straight into a supply zone. But what did you do when you got into the supply zone or wicks, right? Wicks with candle body closes below the 382, which was acting as the mid of this zone, which is that's bearish price action, right? So that was prime time to go risk on, which is why I gave a huge amount of calls over here, right? And the same with USDT dominance. You use both the same. If you look again, September to October time, what was happening on USDT dominance? Right here, September, October, confirming lower highs again, right? Further confirmation of lower highs, bearish price action occurring, right? Pushing down, pushing down, pushing down. along with the Dixie, you have two macro indications now that it's probably better for you to be risk on than risk off, right? Especially when you use just normal charts in conjunction with this, you see your, traditional cryptos, your traditional assets are completing M shapes, giving type 2 returns. There are areas where you can manage your risk, buyers are showing interest, all of that together, you look at this together with that inverse relationship in mind, and then you just use that to sort of give yourself an idea, right? Should I be risk on or should I be risk off? That's how I personally use it. Okay, but that's Dixie. Let's look at others dominance. Others dominance is a critical area. You can see this. This is for you, for people that are heavily in alts. Here's a bit of opium for you. Others dominance. If you see others dominance, you have completed a beautiful Gartley. 618, 786, right? 1.7, 0.382. That's a beautiful Gartley right there with what looks like a type 2. There's your type 2. And that type 2 is what's it doing? It's in line with that demand line, right? So if it bounces from here, what you're seeing the market cap, right? The dominance, the market cap of others, which is your altcoins that are not in the top 10, right? So basically, the altcoins that most of you will be in, you can expect a nice relief on those. Should this catch follow through and go up? Right? Obviously, very easy. If you start losing this area and you see weakness, you start closing below, you just cut your alts because that's not looking good now. Right? You just cut your alts at that point. But currently speaking, this does look good. And actually, I could probably adjust this one sec. Uh, probably adjust this a bit more to do something like this. That actually looks much cleaner. Yeah, so you lose this. Look, if you lose this line, you start closing below, breakdown, failure to reclaims, just cut your rolls because this is not looking good, right? You can give yourself a very easy trigger. You below this, no alts. If you get back above, just re-enter your alts, right? It's not your price for your alts are pretty much going to be the same anyway. So others dominance looks good for now, but of course, let's see if this is lost or not, right? Um, Another one to look at, ETH against BTC, right? ETH against BTC. This one we've been looking at for a while now, and this is a chart. This is a Gartley we've been looking at for ages. 0.786, 0.602, 1.344, 886, right? So I'm for the non-harmonic people, I'm just sprouting random numbers. But basically, what I'm trying to say is look at the ratios. This particular harmonic is called a Gartley. And for now, what you're doing is you're really, really adhering to all those ratios, right? So of course, this harmonic is not completed yet. The harmonic is only complete after your D point hits and you get follow through from the D point, right? That's when you say the harmonic is completed. But I'm looking at this as a potential bottom for ETH against BTC, right? Because I'm not overly bearish. So we can look at deeper levels. Should we lose this area, of course, right? As price action develops, we're going to adjust accordingly. But for now, as we haven't got price action at this area, we don't know how it's going to react. This is the next target I'm currently looking at, right around 0.03671 for ETH against BTC, which lines up pretty much with this peak you see here. Resistance, support, support, right? Resistance, support, resistance, resistance, and if you can now treat this as support, I think it'd be amazing. Few reasons why. Firstly, if you guys remember me talking about this a while ago, I was talking about the seasonality of ETH against Bitcoin. Right, the seasonality has been that halving years, ETH against Bitcoin has tended to outperform, right? So halving years, ETH has started to, in history, ETH has begun to outperform Bitcoin, and post halving years, that's when ETH has really expanded against Bitcoin, right? So we saw that 2016, and we saw the same thing 2020, right? Look, halving year, ETH outperformed Bitcoin, not by a huge margin, but we see up, right? But then post halving year is when you really got the expansion, right? But what we see this halving year is we see the complete opposite, right? We haven't got performance that has been indicative so far from the last two halving cycles. ETH against Bitcoin hasn't been strong, right? If anything, ETH has been down against Bitcoin, right? So hopefully what we get is we get some sort of bottoming structure around the 786, right? Of course, I'm not going to say this is the peak or bottom. We could chop around. But as long as this area is reclaimed, as long as you get candle body closes on the higher time frame above this level, then I still think, post halving year, we could definitely start to see ETH start to outperform Bitcoin. It's just going to be delayed now, right? So the seasonality so far has been off of it. We don't see, we're not getting the same seasonality we saw the last previous two cycles. But as long as you can hold this area and then, more importantly, reclaim this demand line if you lose it, right? You can see support, support, if we're under it for now, but as long as you can go and reclaim it, right? That would be very bullish, and that would be, in my opinion, what triggers the ETH starting to outperform Bitcoin again. So these are all, before I go on to like proper coins, just other charts you need to be paying attention to, right? Um, and we've got total one, total two, total three others. So you can see all coins are bleeding the heaviest right now. Money's rotating out of all coins the heaviest, followed by Ethereum. But that is a few coins. So if you guys now have any alts or anything you want me to look at, right, just put it in the chat. Let me go and see. But in the meantime, let me go over a few coins that I think look good. So for those of you that missed the huge video I put out on my channel, I'll just go over it here. If you have any questions on, by the way, if you have any questions if anyone did watch that video, you have any questions on any of the coins, right, in terms of TA and stuff, just let me know. But let's begin with AVAX, right? Why do I like AVAX? The reason I like AVAX is very simple, right? We take one look, just the macro, right? We don't need a million lines on our screens for me to explain this. What is this? Again, for those of you that know how harmonics work, this is a pattern we call a bat, right? Your C point is lower than your A, your D point is higher than your X. This is a bat. You have your 886, you have your 489, a 725, and a 2.119. All the ratios are adhered to, right? Micro 886 right over here, I've left that on just so it's visually clear. What we see after this 886 is complete is we see a year of chop, right? Just chopping around the level, before we get a breakout retest, successful reclaim here, we sent us higher towards the terminal one zone, right? Again, Scott Carney in his books, he doesn't work with zones, he works with bars, right? He calls it terminal one. It's just the 382 from your A to D, right? It's just your 382. I work with zones, it's just a bar my own system. I work with zones. So you hit the terminal one zone, right? And then you reject it, right? This is very classic price action, right? Terminal one is your first target, technically speaking, when you have a completed harmonic at a PRZ. Once the terminal one was hit, what do? We got a pullback, right? We got a sell off. Again, nothing to be worried about. That's expected price action, right? And again, which is why we enter with logic, you enter with a framework rather than entering on emotions, right? You always enter with a framework. And the framework would have gave you entries down here, right? There's no framework that is good that's going to be telling you to buy AVAX at $62, right? You hit your terminal one zone and then you had your pull down, right? You had your return. So this is your type one reaction, right? This is your type one test, right? It's a terminal one test. And then this is what we call a type two return, right? And what did the type two return do? Look, very, very beautiful, very, very significant, right? It went straight back to the 886, right? Which is the completion point of the actual harmonic look. You went straight back to the 886, and then you got a beautiful reaction of it, indicating buyers are still interested in this area. You've validated this harmonic even more, right? This is a 2-year harmonic, right? 2020 to 2022, 2-year harmonic, followed by a year of indecisiveness on, okay, well, this harmonic going to play through or not, followed by another year of a initial reaction, and now you've had this year so far a pullback, right? This is a multi-year framework, guys, okay, which is why you do not take this lightly. Okay, this is not happening on the 5 minutes, on the 3 minutes, on the 15. This is happening on a multi-year timescale, 2020 all the way to 2024, currently speaking, right? This has been in development over 4 years. You finally got your type 2 return on AVAX right there, right? And it's been a successful type 2 return so far because the level is holding as support, right? That's what you want to see. The level is holding as support. Buyers demonstrated their willingness to enter at 17.51 again. And on top of that, what have you done, right? So far, it's been a successful type 2 return. So what have you done? What else have you done, right? Is this again, if I now go to something like the yearly, right, we take a look, yearly to 6 months, actually. 6 months is always nicer. Again, just going off that concept I was talking about earlier, right? This is clearly a candle where overall buyers were in control, right? How do we know that? Because look, price opened at 10.9. It went as low as 10 before buyers rallied the price all the way up to where? 22.79, right? Buyers rallied the price all the way up to 22.79. But what happened once you hit 22.79? What happened is you got a drawback down to 13.03, right? So again, this area is representing the area where on the 6 months, sellers took control back from the buyers, right? My system, this is what I call a seller zone. Sellers took control back from the buyers in this area, right? So what you're saying is if you want AVAX to trade higher, obviously you want to uh, flip this area into support, right? And we're looking at this on the 6 months. You're not looking for a daily flip. You're looking for a higher time frame confirmation where sellers were once active, buyers are now going to take control, right? So you look, you've got this. Following this, what did you get? Right. Following that, you got a very clear breakout here, right? You've got a breakout, and then what you're finally getting again is you're getting that retest, right? You're getting the retest of what was once a seller zone, an area where sellers took control back from the buyers, an area where sellers were active, an area in history that indicated there is huge supply here, right? You're now retesting the area. You're trying to confirm the validity of this 6 month breakout, right? And as long as you close the year above this, right, you'll be able to swing AVAX, in my opinion, right? But obviously, for more precise entry models, you're going to go lower in the time frames. But just to show you how beautiful this is, right, on a significant time scale, what was once resistance is now being flipped to support, right? Look, you flipped the zero point 0.5, which had confluence with the 886. You went to the area, and what have you done for now? You've closed above that seller zone. You've indicated the supply out here is running out, right? So far, that's the indication of what the price action is telling us. Supply here is running out. What was once a supply overhang is turning into an area where the demand has absorbed all that supply. Supply is running out, right? And you guys know if demand is greater than supply of an asset runs out, obviously the asset is going to start trending up in price, right? So AVAX, for that very reason, I think looks absolutely beautiful. On the macro, this is one of the nicest charts, in my opinion, right? Put all that price action into confirmation, right? And again, you guys know I'm a big price action trader. That's why I hardly give limit longs, right? I always say I'm manually entering here. I manually do this. I want price action to be on my side. That's the purest form of knowing what's going on, right? Price action is telling me, look, AVAX for now looks completely fine, right? Of course, if in the future further price action comes, which crashes AVAX all the way back down, we'll update accordingly, right? But for now, this is something you need to be having an eye on, right? And if you're looking to buy spot, AVAX should definitely be one of your, more well-established projects, right? One of the more higher cap points. AVAX, in my opinion, should be in your portfolio. This looks great, and you've confirmed like a sort of zone where sellers are active, right? Obviously looking for a breakout of that in the future as well. But you have your B point yet to be tested, you have your T2 yet to be tested, and your final bat targets between the A to C, right? You are not going to be surprised if a year down the line I'm streaming again and we're going to say, guys, remember when I talked about AVAX down at these areas, right? All you have to do was if you're thinking about swinging, just be patient, ladder in, manage your risk, right? And there's going to be people that just mark my words when I say, when AVAX is trading here, that's going to be euphoria, right? We've not really seen euphoria in the markets yet. If you think that what we had so far in the market, especially last year, is euphoria, you're mistaken. Bitcoin hasn't even made new highs, right? Not properly. We've not gone to price discovery yet. That's not euphoria. For euphoria, you want to see what happened in 2020, right? It broke out from 19K, went all the way up to 68. That is euphoria, right? In those situations, that's when you have big money flowing in, big inflows. That's when you have enough liquidity to push all of these coins, right? Where you're thinking right now, damn, there's not enough liquidity in the market to push it here. You're 100% right. Right now, there's not enough liquidity in the market to push all of these projects to these targets, right? But once euphoria comes in and you have ungodly amounts of money rotating into crypto, that is when there will be ample liquidity to push these up, and push is going to come fast. I don't expect to grind up. You're gonna catch, the monthly flip or something. It's gonna be explosive moves up. That's what always happens. Long periods of consolidation, long periods of chop, and once the framework is established, once the composite man is ready, boom, it's big, big green candles, right? You get 100% moves up on the weekly. It's too late. How are you gonna manage your risk after that? There is framework goes out the window once euphoria sets in, right? There is no trading framework because framework is here. The framework to enter to manage your risk is here, right? There is no trading framework once something's pumped 100% on the weekly. After that, it's FOMO, right? It's emotional trading. So there will be there'll be loads of new people coming back in, maybe even people who left the market now, they'll be coming back in asking when is a good time to buy AVAX, when is it $91, right? I mean, you guys will remember this stream very fondly because every cycle is always like that. It was the same last cycle. Okay, every cycle is like that. And those are the times you distribute to those people, right? Let them buy the bags. Let them buy your bags off you at $75 AVAX, right? Not $105 AVAX. It's just a part of the game, right? But AVAX, look, it looks absolutely amazing in terms of framework, in terms of price action. What's price action telling you? AVAX looks amazing. It looks so good. Just wanted to touch on that properly. Rat is green. Let's go. Hang on, let me catch up with the chat one sec. Yeah, thanks, Grassari. That's the godly pattern right there that he puts up. Yeah, yeah, AVAX looks absolutely amazing. Okay, so AVAX, honestly, one of the cleanest harmonic setups. That's why it's at the top of my harmonics list, right? I'm just going to go through a few more. Say, this is another one that's in my port. You guys know this, right? I'm going to slowly laddering into this one. Again, same reason, you have a completed harmonic. Obviously, this is not a multi-year setup, right? Say it's very new compared to AVAX, but still the framework is there, right? You have from this X to this D, you have an 886. And if you so choose, you do have another one, if I am not mistaken. One sec. Where did I put it? Damn, I think I deleted it. There was another one. You can basically, all you're doing, instead of taking it from there, you're taking it from there. That's what you're doing. 886 obviously is going to be slightly deeper, but your overall target's the same, right? Your first 86 is hit. If you want to have one drive deeper, you have a valid harmonic. That lines up with that as well, is what I'm trying to say. Let me just turn this invisible. Let me just turn this one invisible. So there you go. This is the harmonic I'm talking about, right? It's the same harmonic. It's a shark. And obviously, all the ratios, they're there too, right? 886. This, in context, this would not be a area you would want to visit, right? Unless it was a raid. If you did visit these areas, you 100% want to make sure it was a raid, because then, if you did get below 20.26, I'd actually be inclined to say you're probably going to go deeper towards, like in a 14 cents sort of area, right? 14, 15 cents. So this seems in the middle of kind of nowhere, right? In terms of confluence. Only thing I see is a weekly fair value gap, which is, I suppose, one sec. It's tiny, but hey, it's something. There you go, right there. If you wanted a deeper pullback on, say, then maybe you have this, or you get something like this. But for now, what we do have completed is this, right? So we might not even get down to those levels again. You already do have a completed M shape on, say. Again, in my opinion, say is going to do well in the cycle. So this is something I'm laddering into, right? But I'm going to go over this real quick, okay? For those that do not understand what I mean when I say laddering in, and why I haven't given strict, this is my TP, this is my entry. When I say ladder in, now I'm focusing on swinging, right? I only ladder in when I swing. When I'm scalping, it's strict entries, strict TPs, aggressive, no DCAs, none of that, right? When I'm talking swings, it's a laddering strategy. What I mean by laddering in is you find an area where you would like to start an initial position, right? You look at the macro chart, you say, well, is this an area where it would make sense for me on the long term to buy some say? If it's a yes, let's say you have a $10,000 allocation to say, then you take that $10,000, you have an initial allocation that you're just going to market buy at the current price, right? You want to get a position started. Could be $1,000, could be $5,000. It's completely up to you and your risk tolerance. But if it's an initial position, right, and the market hasn't completely shown its hand yet, I would recommend your initial position to always be smaller than your overall remainder that you want to DCA with, right? So let's say you go for a $2,500, 25%, $2,500 entry, or even to make to make it easier, let's say you go with a $2,000 initial entry, right? Out of your 10K allocation, you drop a fifth of that straight in at market price, 2K. You buy 2K, right? For my strategy, what I do after that is from a laddering in, okay? I split the remaining. So let's say 8K, I split that into two, right? And the ratio is up to you. It could be a 70-30 ratio, could be a 50-50 ratio. It's completely up to you, okay? But what you're going to do is split that remaining DCA into two, right? One DCA is for if you go lower, right? So let's say, to make it really easy, I'm going to work with nice even numbers, 50-50 split. 2K was your initial entry. You've got 8K left. That means 4K and 4K split, right? You have 4K to DCA with if you go lower, right? And you are going to have key levels sit on your screen just like this, right? In areas where buy sellers were active, macro key levels, and you just slowly allocate that 4K the deeper you go to those key areas, right? You're not going to touch that last 4K. Doesn't matter how deep you go, you're not going to touch the last 4K. You're going to make your 4K last, okay? And the reason for that is the last 4K, the remaining 4K, right? You're only going to add now on a size up, right? I talk about the importance of sizing up. Sizing up is so important, okay? People are only happy DCing down. You need to be happy DCing up, right? It's not about your shiny entry, or no one cares about your flashy piano card. It's about how much you actually make, right? So that last 4K for ease of mind, right, is for when you finally get the macro changing character. Okay, so for example, we're on a downtrend on, say, on the weekly, right? Locally speaking, for now, we can see that. Where's your last lower high? That was pivotal here, lower high, lower low, right? You're gonna wait for, say, to go take out that last lower high, put in a macro high low, right? Once you see the macro high low come in, that is when you would enter the last position. And the reason I'm saying this is because you want to be sure you're not on the sell side when you're fully allocated, right? You're simply doing this to ease you. I'm trying to make this, right? This is the I can put, especially for my students, because this makes it now easy for you to not be emotional. You always have a bag left, right? That you're happy with. Obviously, it's completely up to you what the ratio is. But in doing this, you've got an initial entry at a key area. You've got money to DCA down with, should you go lower. But you're never going to be in a situation where you're completely out of money in a red day, right? Because you're always going to have a bag to add up on once once the trend actually shifts on the macro, right? And this is your final addition because you've now got confirmation that, okay, the last lower high was taken out. We put a macro high low in. We've gone from the sell side to the buy side, right? You've shifted trend on the weekly. This is probably the start of an uptrend, right? And with that in mind, if you now know you've taken the lows, you've completed these M shapes, and on top of that, you've also put in a higher low, it's going to be much easier for you to hold your positions, not be emotional, right? The reason I'm doing it like this is firstly, this will help you preserve your capital, right? People say DCA, but there's many ways you can DCA, right? And there is a wrong way to DCA as well, which is just completely nuking your entire cash reserves in one because you think this is the low, right? That's a mistake many people make. You don't want to be doing that. So this is a system, again, I call laddering in, where you're spreading your cash into different trigger points, right? One trigger point is for lower. One trigger point is you're buying because the market's at a good area. And your final trigger point is, okay, we've got a shift in trend. I want to be fully positioned now, right? There's no point being fully positioned if you don't even know if the bottom is in, right? Because until the high low is put in, technically you're still in a downtrend. How do you know if the bottom is in? So you save that last bag for when the actual bottom is in. When you've got confirmation the bottom is in, because now you've shifted trend, you put a higher low in, right? That is when you really fully allocate it. And even though, you might think you're going to miss out on a lot of price action, you're not, right? Because if, let's say, at this point you have $6,000 worth, allocated through here, so maybe your average is here. If you get a high low somewhere around here, your average is now over here. If you were expecting, say, to do a 10x, right? 10, 20x, does it really matter if your average is here or down here, right? I would argue it's much better for majority of you to sacrifice getting the bottom tick entry to actually have confirmation and confidence behind your trades, right? And emotional well-being, mental, psychological well-being as well, because this is what this laddering in method will give to you, right? So when I say ladder in, this is what I'm talking about, right? Which is why I've not given many calls right now. I'm not trading intraday. I don't like trading intraday. Okay, I'm either a scalper, I don't call my scalps, or I'm a swinger. And for swinging, I'm slowly giving you these coins which look good to enter in on. But you're going to be laddering in like this. Don't expect to have your entire position in your hand in a day, right? I think that's the wrong way to do things. If a setup's taken this long to create, why would you then go all in on a single day? Right? Just let it spread it out a bit. Spread it out a bit. Because even if you get a huge pump, you're going to get some sort of confirmation of a higher low. You can always just enter then, right? But you're going to be catching the bottom. And I'm sure that setup would have helped many of you out, right? Especially if anyone was sat there being bearish on Bitcoin at 15K like an absolute idiot, right? Because if you waited for that, this is what I'm talking about, look, right? Why was this? This was the first time I opened a swing, right? This again, I've shared this in my channel. I wasn't in Unity when I opened this, of course, but this is the first swing I opened, right? Why? Because this was the first time you actually went and cleared out lower highs, right? And you had a weekly close of a high low after key areas from history were retested, right? Look, 19K peak. After key areas were retested, and you have weekly bullish divergence being printed. You have key areas being flipped to support. Like I said, you have uh, price action telling you that buyers are showing strength at the lows, right? So many factors were there, which is why this was the time to do a swing right here, and then averaged up here, and my last swing is from 38K, which is still open, right? But you open some position here, but you don't go fully all in here, right? Because you don't know if this is the bottom or not yet. But once something like this comes in, right, this structure starts developing, you can have a greater idea. And looking back at this now, ask yourself, right, if you were someone, let's say, that tried to go all in on 15K, got stopped out, and you didn't trade the market, right? Only to see back and see this, would you be happy if your average price was, let's say, around 21, around 26, right, around 33? Yeah, you'd be happy, right? You're still catching a 2x on your entire portfolio. So trading isn't about trying to milk pico bottoms and sell pico tops, right? In my opinion, trading is about trying to extract as much value as you possibly can from the market, right? In a way that makes sense for you to do so. And if there's a way, if laddering in is a way that helps you maintain your psychological and mental well-being, right, your emotional well-being, then you should definitely consider that over, full punting your portfolio at key areas, hoping it sticks. Okay, because it's not going to work out for 99.9% of you. That's guaranteed. Let me check back to the chat. Say, yeah, bro. Say looks so good. Say looks amazing. Um, so we have yeah, we have AVAX, Save, a few other ones that I've talked about previous streams as well. We have WIF, again, completed 786, completed Gartley. You're currently, you've rated the 5-day fair value gap mid. So, key liquidity has been taken. Where are you currently sat? You're currently sat, firstly, again, if you think in terms of buy seller zones, right? Let me turn these two off once, falling wedge and group one. Turn that off, right? Key levels, yeah, take that off. So we have, firstly, what is this? Right? This is, again, if you look at the weekly, right? I should be coloring this green actually, blue. If you look at the weekly, I'm gonna have my weekly in blue. This again is an area where buyers took control back from the sellers. Right, look, price opened here. Sellers tried to nuke this down here, but buyers took control back from the sellers and then drove the price all the way up, right? So you've got a zone where buyers took control back from the sellers. Buyers demonstrated their willingness to bid, right? So if you have such areas where, in history, you see that buyers have shown their readiness to try and bid that area, to try and hold there, right? Then if you see the same area being re-regarded as support, you don't just fade, right? That's what I'm trying to say. That's why this area is marked. And you can see, right, you hit front round of one, and what did you do? Flip the 0.5 into support, which took you all the way up here, right? Now, if we go to the last 4-month close, which is another one to watch, we have this, right? This is the area. Look, sellers took control. Price opened here. Buyers took price all the way up here before sellers took control and drove the price all the way down to this until what happened when you come here? Buyers took control back from the sellers and closed the price at 1.518, right? So this yellow is now representing a buyer zone area where buyers were in control, right? So you've got now you've got two different ways in which you're showing an area where buyers are in control, right? So what you're saying is, look, as long as these levels hold their support, right? As long as these levels aren't lost, there is no reason for you to be blindly sitting there hoping for, 31 cents with, right? Because you're at an area where buyers have shown their willingness, shown their readiness to take control back from the sellers, right? And that's very, very important. So as long as you're holding these areas, it's good for you to at least have some risk exposure, which is why I'm telling you for swings, the strategy I described, laddering in, can be so helpful, right? Because you are not spending all your cash at once. You can absorb the chop going on. It doesn't matter how small, how big your portfolio is, okay? Because if your portfolio is tiny, in my humble opinion, like, just trying to enter just one specific spot position isn't going to help you much, right? You think of ways to get your initial cash reserves up anyway. But once you get to a certain point, it makes sense to ladder it in, right? Even if it's just one project. Let's say you only have $1,000 pool, choose one project. There is no point in you spreading that out. Choose one project. If you have $1,000 pool, literally one project that you think does well, spend the entire $1,000 slowly building a position in that laddering. That's going to serve you in the long run much better than you taking that thousand saying, I need to up my risk to make quick money, right? Fast money doesn't stay for long. But these now again become areas. Like I said again, if you have $1,000 allocation for WIF, let's say you enter $2,000, right? 4,000 to DCA with should you go to these lower areas, right? You're just going to DCA as certain. if buyer shows interest in an area, right? So let's say you pull back to 0.5 again, right? And buyers actually show their willingness to hold this area, then you're going to DCA. If you get there and buyers, you see candles literally slicing through, you're not going to blindly DCA, right? So you're really, really making that cash stretch. You're only buying when it's time to, right? And that's how you make that 4,000 stretch. So let's say you get something like this, right? You open a 2,000 position, you nuke like this, you actually end up closing below, you're not going to blindly DCA. The only way you're going to DCA now is if you either buy, show a reclaim of this area, you're going to DCA then, or if you go to these lower levels, right? And buyers active there, that's where you're going to DCA. If you get to this area and buy still haven't shown strength and you end up closing below, just cut your $2,000 position, right? Look, you entered out of a 10K position, you've only entered 2,000. If you cut close here, there is literally no risk to you. Literally no risk, right? And if you reclaim, you can once again allocate and slowly build up, right? Very, very easy. But this is how you really manage your risk, like using price action, using actual logic, using emotional control, right? Add key areas. And with the last 4,000, like I said, only when the trend shifted, right? You're really protecting your capital this way. What many people do, they just set limits, blind limits for areas, and then they think just because they say they need to go heavy. That way, if you're wrong, you automatically, as soon as you stop loss it, you've lost a huge chunk of your capital, right? So for me, price action, like I said, I will keep saying this. Being able to read price action is the number one skill that's going to set traders apart. Okay, there's traders that can't read price action. There's traders that can read price action very well, and I would like to think I'm on the side that reads price action very well. Case worked out for me well so far. You need to be able to do this. That's the number one important skill that you need to develop. If you can read price action well, you don't need to draw lines on your screen. You don't need to have indicators, right? You're simply analyzing what's happening in terms of buyers versus sellers, getting a feel for that, and then after that, you execute it. So that's WIF. Another one that looks very, very good, right? For spot, you have completed a dragon on WIF. Potential for this to turn into a cipher, so I'm watching that. But again, you have a macro godly, right? You have a macro M shape, and that's the important thing. A falling wedge, all our key areas, right? Basically, yeah. Here's your targets, right? There's your T1, T2, and then your range extremes are there as well. That's where, right? And you have an 886, of course, right? If you want to, you do have an 886. But that's only if these levels are lost. You're not going to be blindly sat there waiting for this, right? But just trying to show you what I mean by laddering in, right? Because I feel like people don't understand what I mean by laddering. I've been saying ladder in to spot. So a few calls I gave back towards, I think it was like March, right? I said ladder in. That's why I've not updated any of those plays because I entered the initial amount. I still have a huge bag left that I've just not DCA'd with because no strength from buyers has come in since that time, right? Since March, April, whatever. No serious trend on the higher time frame, especially in alts, has come in. So I've just not had to DCA, right? I'm holding a majority in cash still. And that's why I'm completely chill, right? So the time frame you're trading you should have time frame specific strategies, right? I will repeat this. You should have time frame specific strategies. This is obviously sounds like a no-brainer, but you won't believe how many people try to trade the 6 months, try to trade the monthly, the weekly, the 3 minutes, all be the same strategy. It's not gonna work. Okay. Different time frames will require you to be thinking in different methods, right? So like I said, for when I'm scalping, I don't DCA, I don't limit long. Tight entries, right? Entry if I'm wrong, I just manually cut straight away. Very, very aggressive, right? And that's how I was able to make that 80K in that quick Bitcoin dump that happened to 49K, right? I put it all in my Twitter, bits and bobs of the snippets, all sizing up, being aggressive with my TPs. That was all lower time frame strategies, right? Nothing higher time frame about it. But when you have now coins coming down to these macro M shapes, I'm not going to be sitting there thinking I need to apply my 3-minute strategy at the areas like this. The return on investment is going to be much higher if I just take the bags I made from my lower time frame, right, when it was right to do so, and now apply it to a higher time frame strategy, right? So that was with, and again, guys, I'm not going to go over all of these, right, because I've got a whole YouTube video on it. But hopefully, the reason I'm doing this is because hopefully you guys understand my entry model when I say ladder in, right? Like I don't mean wake up every day, buy $50. If you want to do that, that's up to you. But for me, I need correlation. I need a reason to be buying, right? And I want different triggers. Firstly, I want to have a bag ready for when we actually finally confirm a break in structure back to the upside, right? Like a macro high at low. I want to have a bag for if we go lower. and I want to have an initial position. That's my main three concerns, right? That's why I split it up. And if you, for whatever reason, if you've run out of money to DCA with on the way down, which you should never do, because like I said, you should wait for price action before you actually buy. That doesn't mean you don't take the allocation for the higher low, put it back into DCing at the lows, right? Because there's no point. If the coin is still going down, why are you buying more, right? That allocation is for when you make a higher low, save that money. Right? You got to be strict with this. You've got to be patient because this might require you to for a couple of months to just not do anything, which is why I've not given many calls for the last 3 months, guys. I'm sure many of you have noticed I've hardly given any calls, right? Because I'm not an intraday trader. Okay. I've got multiple businesses in real life, right? I travel a lot. I've got no time to be sat there checking charts for intraday trading. I either scalp, right, or I swing, right? And for scalping, I don't call, but now I think is a good time to actually think about swings. These are potential areas where macro bottoms can come in, right? So that was with, right? Again, there's so many, right? Another one I do want to quickly touch on, IMX, right? This is again been talking about this one. We talked about this one in a few streams now because it did have a nice pump. Look, why did IMX pump? Not because of any magical reason. Look, you had a Gartley 786 again. I would like to add pretty much a perfect Gartley 618, 786, 1.618, right? This is by all means a perfect Gartley in my eyes, right? This is beautiful. This is perfect. This is like Angelina Jolie's face, right? Perfect symmetrical proportions. This is what is talking about, right? The key areas. That's why you had a bounce, retest. Again, retest was successful, a bounce again. You're not going to be blindly entering here, right? The only reason you would buy now is if you got a flip of this trend line like this, right? And then you'd be, of course, taking it to B. If you got a flip of B, you can size off for the run to C and A. Or you get under the pullback down towards these levels, right? That's the only two areas I could buy. Because if you think about it now, where are you in the middle of nowhere? That's where you are, right? So just obviously we've got rate costs coming up, so on and so forth. Just leave it, see what happens. But IMAX is another one you should definitely watch for. Okay, because look, low, higher low. If this is another higher low, this thing's gonna run, in my opinion. Because the trend is look low, high, higher low, higher high, higher low. It's gonna follow the trend. The trend is your friend. It's gonna be a higher high, right? The higher high could be maybe somewhere around here. That's a nice area I'm looking at, right? Between $5 to $6 basically. But hey, look what IMX is running. That's a 5x, right? That's pretty much a 5x. So don't miss the opportunity by sleeping on these coins. Right? There's a reason I spend so long. I spent like a whole week going through some of these, creating this list, finally releasing the YouTube video, right? There's a lot. Of course, some coins in the video I released, some coins are going to be better than others, right? So some of them are obviously super low caps. For example, coins like Clay, right? Look at the macro chart. Is this something you want to be buying? Ask yourself. I'm simply sharing areas where you can manage your risk. That's all I'm doing, right? And for Clay, flip the bat, enter, right? But some coins like IMX, like another one, Saga. This is another one. This one wasn't in the video. This one I only literally saw yesterday. But for Saga, we do have a completed Gartley here. If you go to the daily, right, you can see this clean. And this is why I call this one in my channel. I said if you flip this, you'll be looking for a quick trade, right? If you flip this Gartley here now, because what do you have? XAB. XAB was a 618, C was a 382, and D was a 786, right? So I've marked out the area because obviously 1.721 is a bit past the recommended extension for D, but the 786 is lower, so that's fine, right? So I've just marked out the area between the 1.618 extension of the Gartley and the 786 retracement of the Gartley. If you can get a flip of this area, right, on the higher time frame, on the daily, you look like you're trying to do it, but in all honesty, I would want to see a weekly flip because you've used this as resistance on the weekly multiple times, right? Look, resistance, resistance. What did you go down to? You went to the 886, double bottom at the 886 plus a higher low, right? Very, very beautiful structure. If I zoom in, you can see that. That's the reason I'm bringing this one, guys, to your radar. Beautiful structure, right? Double bottom to a higher low, right? Followed by a breakout. If you can get a flip, enter. Don't be hasty. Don't blindly enter because only enter if you can manage your long and this price action confirmation, if you can manage your risk, right? In my opinion, if you enter here, it's going to be hard for you to manage your risk because your logical stop loss is going to be below the 786, right? And you got to ask yourself, is that something you're okay with, right? If it is, go for it, right? Personally, if you were to market long right now, I would actually say below these wicks is where you'd want your stops, right? Just looking at areas where we rated before, something like this. Your stop should be something like this, right? 19% away. If you're okay descending in the area, you can ladder in, right? But otherwise, I'd wait for a cleaner flip of the weekly to properly size up. If you do size up here, basically do it with a reduced position size for now. Reduced position size, just in case, the higher time frame does fuck you over, right? Because for all you know, the weekly closes in 4 days could SFP and close back below, right? How many times a breakout trade has been wrecked this way? Too many to count, right? So just give it The structure is beautiful. That's why I'm pointing this out. You could, if you think of this like a range, you could for sure go stop everyone out once more and then break out, right? There's nothing wrong with doing that. In fact, I think it'd be a bit too nice if they gave us this, right? Look, someone's built a long, built another long, built another long. They're just gonna let you print, right? You could argue that's too nice. Maybe you get one raid and then go higher. Who knows, right? But I'm just pointing out, as long as you're above this box, this does look good for higher, right? Look, your B's here, and this falls in within the terminal one, terminal two falls within here, right? So here's your two TP targets. After that, you're going straight to the A. But Saga is another one to watch, right? This one looks really, really good. And along with Saga, another one I called in my channel to watch for is Rio, right? I did start a small position on Rio. Again, I'm laddering in, right? Let me find Rio. We talked about this one before, but Rio looks beautiful. Right? Let me just find it. Where's it gone? Where is Rio? One sec. I've not bothered sorting these out into their respective narratives. I've done that in my master list. So hang on, I'm sure I'm just blind. One sec. Yeah, there it is. Jesus. Okay. Rio I'm eyeing because of what's being attempted currently, right? Currently, we do have an attempt of a Gottlieb 76 reclaim, right? You see that? 618, 786, basically a 1.618 here, right? You can mark the 1.618. I'll make it into a zone if you want. Let's do it actually, just for you guys. Just for you guys. Let's see what zone you're working with. So let us take the XABCD. Let's unlock it. You have the 786 marked. Your 1.618 is going to be just above. Just zoom in. It's going to be a very tight zone. Let's see, 1.67427. 7427. This is your Gartley 1.618. So basically, again, what you're saying, just like we saw for Saga, you're saying if this reclaim is successful, right over here, and let me set the proportions correctly. 7427. Oh, that was nearly perfect. Damn. Sorry, I get excited about the most random things. One sec. 7174. Oh, back pads. All right. 717. There you go. If you can flip this into support, right? Look, what you're saying is the Gartley has been reclaimed, right? As important zone from the Gartley has been reclaimed on Rio. Let me just extend this to the left to show you the importance, right? Obviously, you guys know me. I don't trade harmonics on their own. The PRZ for me needs to make sense. And if we extend this all the way to the left, what do you notice? Look, is it coincidence that this happens to be such important support and resistance, right, on the higher time frame for Rio, right? Look, support, 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 right? Breakdown, and then resistance, 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 flip back to support, and now you use this resistance once. Now you're trying to reclaim it as support. If this reclaim is successful, once again, I have a small allocation already. I have my 50% that's ready to be deployed on drawdowns, right? And obviously, I'm going to cut this if these lows are lost. Very obvious. There's equal lows here, basically, right? If these lows are lost, I'll cut. But down there, I'll be slowly DCAing to based on price action, right? And the remaining 50% will be added in when we finally put in a higher low and a higher high as compared to, let's say this is the last lower high, right? You go out, take that out, put in some sort of higher low structure. If you do that, that's when I'll mark it in with my remaining position size, right? That will be fully allocated. And look, under the strength of this is, since your initial position was lower and you DCA'd lower as well, right? By the time you mark it in here, your average is still going to be in the green, right? And if you actually wait for the confirmation of a higher low before marketing in, you can have a very high probability entry here. Your average price is, you can be confident in this. You can put your stop loss to break even, right? You're already going to be in the green. You can put your stop loss to break even. There is zero risk to you. Okay. That is the last benefit of the strategy. So for those of you that don't understand what I mean, right? So let's say you open a position size again. Let's say $10,000 allocation to make it easy. You open $2,000 allocation here, right? And as you go lower based on price action, let's say you allocate your 4,000. So by the time you're back up over here. Your average price is down over here. You've got a $6,000 position, right? Your last 4,000 is going to be put in when the last lower high gets taken out and you put some sort of high low, right? Once you get the confirmation of the high low and you see price start to trend up again, if you mark it in here, your average price is going to be somewhere around here, right? But your average is still going to be in the green. Your trade is still going to be in the green because look, you already had a back from down here, right? Now, actually, I'm just going to be a bit lower because you have a $6,000 position and you're adding a $4,000. You're going to be skewed to the down, to lower side, right? So your average is going to be somewhere around over here, and it's already going to be in the green. You can put your stop loss to break even, right? You can put your stop loss to break even, but the probability of your stops being hit here are now low because you put in a higher time frame trend shift, right? Markets don't just randomly reverse after you put a higher time frame trend shift in because now you've got because of that reason you've got a high probability trade, right? The chance of your stops actually being hit are low, and even if it hits, you're not losing anything, right? So you've set yourself up very well because now you're fully allocated. You're allocated in a way your stop loss is at break even, right? And you've had no stress because you always had a capital to fall back on. You didn't ever, go all in, and you waited for all the right tickers, all the right triggers rather, to enter with. And once you get the high time from trending shift, well, first target, second target, third target. And still, you're talking about a 4x, even from like an average entry like around here, right? You're talking about a 4x minimum. And if you break above, even better, right? Rio is another one that I think looks good. There's many that look good, guys, right? I've given so many that one more I do want to go over, right? This one I want to mention really well, because some people might have been confused about how I even got a Gartley in this to begin with. I think Monero looks fucking amazing. Okay, XMR looks so good. Now this Gartley, right? Um, if you're talking pure framework, pure harmonic framework, this is not a valid Gartley. Okay, this is a Gartley in context. Let me explain what I mean. First things first, let me get rid of all of these. Let me hide that, right? And let me actually go ahead and hide the horizontal rays as well, just like that. Okay, so we can see at the first I looked at Monero, I realized, oh, there is an M shape there, but there is a macro M shape. It's not the cleanest, but there is an M shape. So this 618 here, I took in context. Okay, what is the context? I used you guys will see me do this a lot, right? I do this a lot. I've done this a lot with some of the setups I've given in the past as well. If you were to actually pin that B to that wick low here, this would not be a Gartley. Okay, you've exceeded the retracements of a Gartley. But in context, what I'm saying is if you have enough data, ask yourself, okay, what is the perfect retracement for a Gartley? It's a 618, right? We know a 618 is the perfect retracement for a Gartley. Mark out your 618 and put it down, right? So here is the 618, right? The macro Gartley 618. Then ask yourself, okay, was this an actual significant action in price or was this a liquidity grab? Okay. If it is a liquidity grab, I do not take it into context, okay? Because that's exactly what it is. A liquidity grab is literally there to raid liquidity, ruin market structure. That's what liquidity grabs are for. And this is very evidently a liquidity grab because look what happened afterwards. You closed above the 618, so clearly the 618 is still in play. You re-regarded the 618 as support multiple times. You can see that, right? Support, and this is on the weekly, okay? Support, and then breakdown, retest before reclaiming it as support. Look, breakdown, retest the 618 into resistance before lower, right? So this 618 is clearly being regarded as a key area. So I'm going to mark it down, right? I'm going to mark this as a 618. It's 618 retracement. Following that, obviously, we have the C from the 618 and we have the D. And what's the D? The D is a perfect 1.618 extension from that B, right? So I'm going to mark that down as well. So what you have now is a harmonic where the B point is in context, right? That's what I mean when I say it's in context. But if you now notice, what do you notice? If you now look, what do you notice, right? What has happened after that M shape is completed? What does this remind you of? And I want you to think back to Aave, think back to Link. This is a accumulation structure. Okay, this is accumulation structure. I don't know why no one's talked about this. This is an accumulation structure right over here. Look, you're going sideways, right? Lows being respected, local chop, highs being respected. You're literally accumulating. Someone is accumulating Monero. And for now, you've actually gone and put a higher low in, right? You're still below the accumulation range, but someone's accumulating Monero. They've been accumulating since 2022. Right? It's been a 2-year accumulation program, right? This is exactly what Link was doing before Link broke out. And need I remind you guys, okay, look, this is exactly what Link was doing before Link broke out. Let me go here, right? And let me see if Link is in this. Let me just open up a random Link chart. Right? We open up the Binance chart for Link. Take a look. What do you notice here? That is accumulation, right? We've had a breakout, and so far what you do, you've retested the accumulation. And actually, Link is another one we'll go over because this looks beautiful as well, right? But this is what Link was doing, right? We look at Aave. I just go to Binance. What was Aave doing? Right? It wasn't an exact rectangle, but look, accumulation, 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 breakout, start flipping trend, right? Retest the what was lows as highs, and then you break it out. Accumulation, right? Multi-year accumulation. Aave and Link both did the same thing. So what do we see now on Monero? We see the exact same thing. Very, very well defined and very, very clean accumulation structure, right? So the D point of the Gali here, obviously respected, right? The D point of the Gali keeps being respected. You've not taken the B yet. So for example, right, if you ever got now a flip, if you got something like this and this, that would be a high probability trade for me, right? I'd just be swinging the hell out of this because this accumulation structure is beautiful. And there's not many accumulation structures out there right now on Bitcoins that have yet been resolved. Like I said, Arb has already started to resolve. Link has definitely already resolved, right? But Monero looks absolutely amazing, in my opinion. Okay, Monero looks good. Got some targets here based off seller zones, right? You've got some key targets on the screen. But Monero looks really, really good, right? And let's take this back to Link. Look, Link, accumulation structure, right? Right here. What do we have currently on Link? Look, breakouts from the accumulation structure, right? They never give you a clean retest. Look what's happening now. You're finally getting that clean retest of the accumulation. Again, what is this? This is a macro Gartley, 786, right? Basically 0.618 here. So this is another one where, if you wanted to buy some for the longer term now, you spread some risk here, right? You get some exposure here. Because look, you have a multi-year accumulation structure, breakout, and now a confirmation that the accumulation structure high has been flipped to support. An M-shape completing, right? On the weekly. You don't just fade these, right? So there's many of these that look like this, guys, right? There's so many that looks like this. So I'm not going to go over all of them. Right? I'm not going to go over all of them at all. Whether you're looking for BRC20 or looking for you're looking for ADA, right? You want ADA. Look, ADA looks amazing in terms of M shape. You have a completed 886, which could take you to a potential bat at a key external liquidity target, right? There's many alts, many alts that look absolutely amazing, right? You want to talk Uni, you want to talk Anchor, you want to talk Woo. There's many that look really, really good. Trias, right? So many that look amazing. Hang on. Where is the there you go. Trias? Um, Ignore this for now. This is just a potential, right? But where you currently are is a 886, right? There is already a completed shot in this area. So as long as you hold this level, there's no need to worry about lower. If you lose this zone, then sure, maybe you get this one day, right? Who knows? But obviously to get this, either, Trias would have to fail as a project, or in my opinion, Bitcoin would have to absolutely nuke for us to get this low. So where you currently are on Trias is a completed shark already, right? 886, 1.618 is in this area. Trias, there's so many, right? There's so many O's that look like this, that look very, very beautiful. FTM, getting a beautiful reaction of the, completed Gartley to a head and shoulders pattern, right? And you got the breakout now. There's so many, right? There's honestly so many. You're not going to be getting into all of these, right? Like I've already said, that you're not going to be getting into all of these. You're going to choose some, right? Choose a few for your portfolio. Choose a few. Maybe do some research on some of these coins that you think look good, right? See which ones you would be interested in getting into, and then after that, that's when you'd be like, yeah, I want to get some. Look, another one, Metis. This looks amazing. So this thing ran. I was actually in this as well when it ran from $8 all the way up to here, right? Because one of my friends told me about this one, so I entered some around $8. It went all the way up to 150. Right? Things like this are possible. And look, these weekly candles, right? These weekly candles, let me remind you, are this weekly candle was up 124%. Are you telling me you're gonna buy after that? No, right? It's literally a few days and your entire framework is gone. You can no longer manage your risk. Goodbye. You're waiting. We're waiting until the next time the train comes back to the station, right? So don't be fading here. Like definitely have risk exposure. There's so many good coins, right? Absolutely a ton. There's a ton of good coins. Don't fade. Um, so many, right? Chili's, massive shark, massive type 2. So many good ones, guys, right? Absolutely a ton. Let me check back to the chat. To answer your question, Con, I just saw it. If you're entering a trade and it's a swing, it doesn't matter whether it's a leverage or spot. Obviously, with leverage, you're going to have to deal with funding fees, right? That's the one difference. If you have the money for spot, obviously you're going to go spot. If your portfolio is a bit smaller, that is when you would utilize leverage. But for swings, you're not going to up the leverage, right? Unless you obviously really, really know what you're doing and you have a specific strategy for the higher leverage. So if you are thinking about getting into swings and let's say, maybe you don't have like a huge portfolio, then using leverage in a clever manner, right? Maybe 2x, 3x, 5x, something like this would be a way for you to try to make your dollar stretch a bit more. Of course, you've got to understand the risk is there with that, right? The risk is there. It's not as safe as just holding spot. But if you do enter at the lows where it's the logical areas to manage your risk, then obviously the risk is also decreased for you, right? And you can't ever enter a trade and not expect risk at the end of the day. There's no such thing as a risk-free trade until your stop loss is a break even. So when you're building a position, there's always going to be a period of time where you're at risk, right? And it's only when the trade goes in your way and your average is in the green now that you can truly say, okay, the trade is now risk free for me because you can put your stop loss to break even, right? But for swings, it's either spot or lower leverage if you're sizing up. Because the problem is if you can try and use lower position size and higher leverage, right? But unless you have a really big port to support that, you're trying to absolutely get into many coins as possible, you're going to get wrecked by funding fees, right? At some point, you will get wrecked by funding fees. Is that for Ria? Yeah, Ria looks really, really good, brother. Ria looks so good. Um, yeah, it's all just coincidence. Yeah, of course. Every single time, every single time it happens, it's just coincidence because we all know fibs don't work, Rosati. They don't work. Oxlink, yeah. What's Oxlink, bro? Gary, I've never heard of that one before. Yeah. Oh, the chart looks like this. Okay, let's have a gander. One sec. Oxlink. Which has the most data? USDT. Let's open up OKX, Bybit, KuCoin, Mex, Gate. Top five exchanges. All right, let's see. Uh, I'm gonna go on the daily for this. What is this? Um, okay, 10 cents, 10 cents. Well, they're all pretty much the same, so I might as well go with the highest volume. Okay, not Mexi, KuCoin. Let's go on Binance. Out of all these, Bybit has the most volume, right? So get rid of. Oh, but wait, because KuCoin seems to actually trust KuCoin to have the lower price. This is 10 cents. This is 10 cents. All right, well, we're gonna analyze KuCoin just because it's got more data. Okay, so I would not recommend buying here, bro, if you're looking for an entry. Um, let's see, in terms of fibs, first and foremost, we're gonna go with, have you exceeded? Okay, well, your this tap here was a golden pocket. You've broken out of that range for now. This was your macro. Currently, you're rejecting off the 0.94 by negative 0.94. You can see I'm just using macro fib extensions, right? That's what I'm doing. Negative 0.94. That's what you're currently rejecting off of. I'm not going to try and give you entry on this, right? I'm just trying to show you how you would potentially find targets. It's basically just harmonics and fibs. That's what you're using. And obviously, harmonics is an extension of fibs. So, but two things you can do is for coins like this, it can be very, very useful if you go on the log scale, okay? Especially for something that just looks like all it's doing is going to price discovery. If I do the same thing on log, you can see what we're currently doing is we're trying to get above the negative 0.5, but you're failing to do so. Right? Hey, if you wanted to short this, if it's on perps, you know, if this daily candle closes below, go for it. But I'm not going to recommend you do that. I'm just trying to show you how to do for setups and stuff. And the other thing you can do is use trend-based fib extensions, okay? And again, this is going to be more powerful on log because linear is too far gone, right? You have got no significant price action on linear that you can use to get high caliber fibs. I'm just going to do it on log, and we're going to be using the 0 to 1. So you have your low, you have your high, you have your high and low. What you've done just now is you have exceeded the one. You're trying to flip the one into support, right? And I have for me, right, I have my own specific set of rules with fibs. Not this, where is it? This is delete. We're just going to do that again. I have my own specific set of rules with fibs, right? We're going to take the low, the high, and the higher low again. Mark that out. Why is my trading view acting? One sec. Okay, there we go. We're going to go 1 to 2. Just a quick tip and trick for you guys. So in my system, right, I have a specific fib area, right? Between the basically 0 point and 1.13, we treat this like a liquidity rate of the one. Okay. So basically what we're saying is people typically tend to target the range extremes, right? Being the 0 and 1. So hardly do you ever get a perfect tap of the one, right? So what you're saying is if you now have a fallback, you lose the one, don't expect the one to bounce. I would actually expect price to react around this area, right? Between the 0.94 and the 886, you've already had the rate, right? That's your rate ratio right there, 1.13, 1.14, all the way to 1.058, basically. So you currently hit your liquidity rate. If this closes below, then it's like I'm not going to tell you to take a short. If you were genuinely looking for a short to take, you do so based on this daily close. Okay. And if you get back above this again, then you're basically saying 1.414, probably where you go next, 1.17. All you can do is look at fibs and try to act on what you see is currently going on. Right. So again, if you're looking at daily 1 out of 4 hour price action entry, on the 4 hours, you can actually see market buys coming in here. People literally market buying on the way up. Yeah, I'm sure these people are going to get away with it at some point, right? I just use this to look for trap traders basically. But yeah, but you break down, you're getting your 4 hour retest for now. On the 1 hour, you've already got your breakdown retest in this area. I'm not going to give you serious analysis on this because you need to wait for more price action to actually develop. This is very much by all means just a coin that just came out and it's run. I don't know what it is, but if you did want to try and take a short, right, maybe try to take this back down to over here. You do so if the daily close below the 1 point, below this one, basically. If you did so, you could open a small short and just put your stop loss above the area. That's something I can tell you. But yeah, fibs are your best friend when it comes to situations like this. The harmonic is like I said, it's in context, bro. But it's in my innocence, there's no point. I'm not like a purist, right? It's and even like I can remember like more than a year ago being on a call with Hoff when we were talking about harmonics. That there's people that strictly adhere to the ratios, and then there's if you take price action into account, in my opinion, it's completely fine to just see what's happening in terms of buyers and sellers, basically. Because in my opinion, there's no framework out there that's going to be right 100% of the time, right? So just using price action analysis to try and get a different perspective. That's what I'm trying to say. But yeah, let me delete that from my list real quick. I don't want that there. But yeah, guys, so we went over a lot of over the laddering strategy I was mentioning, right? Or why I say ladder in. And if you have time, do go through the video that I put out. So we've gone over all the different coins that are there. I'm sure there's a few coins I've not got in this list that if you guys think there's promising projects out there, tag me. Tag me in crypto chat. Be like, yo, does this look good? And when I have time, I look through it. If the project looks interesting, do some research on it. If it's a profitable project that's bringing in revenue, right, instead of just losing money, it's actually in use. It's got nice TVL, and it's maybe the project also has another project out there that's got an absolute killer membership lining up at key areas that we haven't found yet, right? Maybe But collectively, just from when I released the video to now, like, just based off the different projects, we've had loads of pumps, right? So like IMX, Big Time, all these are pumped huge, right? Toshi, uh, Damani Protocol, all of these have gone up pretty, really nicely. Squeeze another one, right? This one, I don't think this one even needs any mentioning. This one's so bullish. 786, basically a perfect godly here again, and you've had a reaction of it. You would be very, very lucky if you got a pullback on this for a macro type 2. If it did, I'll max bid. I do have a position in this, but it's not as big as my say or, like Injective, Aptos, things like this, right? But yeah, guys, so hopefully you guys enjoyed this stream. Like I said, loads of projects out there that look good, right? Do not be fading these in the sense that, I'm not saying you need to buy these because I'm telling you they look good, right? Do your own research. If you have um other analysts doing stream, look, ask for their perspective as well. Don't just go off what I'm saying. Try to get a consensus, but just understand, right? You are currently at areas where, especially for these alts, you are areas where you can manage your risk. That's the most important thing as a trader you can ask for. Many people enter projects thinking, enter a trade thinking, oh yeah, look how much money I'm going to make if the TP hits, or look how high you can go. You should be entering a project not because of how high it has the potential to go, but because of if you are wrong, how much are you going to lose, right? Switch your thinking to that. Instead, I promise you on the long run, you're going to have a much better time with trading. It doesn't matter how high a project goes. What matters is at the area that you're trying to take the trade, at the area you're actually willing to risk your capital, how much of your capital are you actually risking, right? If you lose, it's great if your project had the potential to pump 10,000%, right? Oh, great, you're going to do a 10x on this. That's amazing. But you look back and you see, oh, but if I'm wrong, I'm losing half my portfolio, so my stop loss hit. Why take that risk? Right? That's not worth it. That's moon boy behavior. You don't do that. Okay. So ask yourself, how much am I going to lose if I'm wrong? That's the important part, right? Not how much am I going to make if I'm right. Because capital preservation is key, right? It's very rare that you're going to be wrong 10 times in a row, right? If that's the case, you're either the most unlucky person alive or you've got a fucked up system. You need to take a step back. There's something fundamentally wrong, right? And at that stage, you've got more to worry about than just losing some trades. You need to go and rework the entire system. But never have I ever actually seen someone be wrong 10 times in a row, right? Not serious traders anyway. So, like with that in mind, your goal is just to preserve your capital and enter areas where it's very easy for you to manage your risk, right? It's very easy for you to actually preserve what you have. Taking little chips here and there doesn't matter, right? But if you're losing 20, 30, 40, 50% in one shot of your entire portfolio, you're doing it wrong, right? So that's the question you need to be asking yourself. But hopefully you guys enjoyed this stream. Let me go back to the chat and just I mean, it's Uxbridge. uh, there's a Gotley on the road. uh, yeah, that's how I calculated that, brother. Square root of 886. I really like the 0.94. Rose SSV make per atom. Okay, bro. I'll add those to my list and I'll take a look at those when I have time. Yesterday I was like literally fully packed out like from morning to night because we had so many bookings. We had like international communities, like these really posh international schools from Thailand coming over to eat here. So I was like literally just in the kitchen, helping out front, doing everything. Right. So yesterday was not a chill day. I've got busy today as well. But yeah, no, when I got time, I'll look at it. Yeah, no problem, guys. Thank you all for being here. No, brother, I'm back in the UK. Back in the UK currently. I'll be in Switzerland in a week. I'll be in Switzerland for like a week. Really looking forward to that. But yeah, thanks guys for being here. It's always a pleasure being here. Being showing you guys about this. Then you can see, right? Look how inactive, right, it is right now compare the numbers in the streams right now, and it doesn't matter if it's just me, different analysts. Compare the streams. Once we get Euphoria again, right, bro? These streams are going to be packed out. Just have that in mind. So you want to be positioned before that happens, okay? So just keep that laddering in strategy in mind, guys. Hopefully it helps some of you out. And then apart from that, I'll if you have any questions, ping me in chat, right? Yeah, thanks, brother. Yeah, yeah, thanks, Caleb, bro. But yeah, guys, I'll put this on my YouTube. I'll stop this recording here.